Hello and welcome to another Elliott Wave analysis. Today, I want to talk about dollar yen. Now, it has been some time since I talk about dollar yen, right? So, if you filter my ideas, the last was 22nd May, where it was really a video about go long S&P short and dollar yen, which all gives us a conclusion that we are in a flight to safety mode. Okay. And then before that was the 20th of May, right? Which is about the dollar yen, how it I expect it to move, right? So since then, it has moved, it has hit our first target, conservative target, and then I mentioned that, once it hits here, you can wait for another re-entry. That's why there's two separate arrows, right? And yeah, so what happens is that you have hit this first one, and then you will have you'll be stop up probably. I'm not sure how you would have played this second move, right? So over here, I just want to update on the Elliott Wave itself, right? So here the last time I was just talking about the head and shoulders, right? So I've cleaned out this chart, right? The head and shoulders is still valid, okay. If you go to the daily, you can still see these head and shoulders over here, right? Head and shoulders, and then we want to look at how this wave has moved, right? So I believe on the 20th of May, right? That was around here. So we are at the formation of the first wave, right? So if we zoom in now, I'll probably go slower over here, right? So right, this wave one down, right, did not change. Wave one of three, then wave two of three, right, and then we have this entire move down. There is a bit jittery, right, a bit jittery, right. So this entire move down, which is 148.65 to 142.12, right, around this area. I will call this a wave one of three, right? So wave one is usually not the cleanest wave, right? So that's why you see all this jittery movement. Okay, so keep in mind this blue color one, because right now we are actually in this blue color degree, right? Wave three of three, but this wave three of three is broken down into wave one, wave two, and then now we should be in a wave three of three of three. Okay, so how has this moved, right? So if we study this from the 27th of May until 29th of May, these 2 days, you see this correction, this sharp correction. Sharp correction is usually quite typical of wave two, right? So this gives us more confidence, right, that this is actually a wave two. And the other thing is, you see this ABC, right? And you look at this Fibonacci extension that I draw, right, from wave A right to wave C, you see an almost 1:1 relationship, right? It bridged a little bit, right? It doesn't really matter, okay? It bridged a little bit, right? So this is, I would say that it is A equals to C, okay? Now, maybe I'll just put in this, right? So that it's easier for referencing. A is to C here. Okay, and the other relationship that I want to point out is this entire wave one, right? If we draw a Fibonacci retracement this time, right, you see that this it actually stopped short of 0.618, right, 61.8% retracement, right? Again, it breaches a little bit, right, but it got rejected quickly. Okay, so this also give us confidence that this is the right resistance. This is probably a wave two. Okay. Then following, we see this wave down. I have charted this encounter wave as this 1, 2, 3, 4, and 5. Okay, so over here, maybe I just touch on this RSI. I use a RSI 7, right, because I prefer a faster moving oscillator, right? So what is important to take note is for the RSI study, how it relates to Elliott wave is that usually when it is overbought or oversold for extended period of time, right, it's a wave three. Okay, so over here you see this move down, and then you see the RSI going to the oversold territory, right, and and it lasted for quite a while, right? And then this gives us confidence that it's wave three, right? Then we need to confirm that this is a wave three. And how do we do it? Is we use the wave five and RSI, right? So usually what happens is that on the wave five, right, you will still get the RSI pointing down. We should talk about down movement, right? But there will be a price and RSI divergence in the sense that price has moved lower, but RSI did not move lower, right? So over here you get almost the same amount, but you can see that in terms of the duration, it did not actually move longer, right? And I believe this was slightly higher than the low mid in wave three, right? So wave five is typically we will observe price to RSI divergence, right? So this gives me confidence that this is one entire wave, okay? And then we have these A, B, and C, right? So on 1 degree lower, right, we are actually what we have seen is this is then another wave one, right, and then wave two, and currently we should be on a wave three down, right? Unfortunately, wave three itself is also can also be broken down, right? Why I say unfortunate is because I really don't like to break it down into so many levels, so many degrees lower, right? But what you can see over here is probably a 1, 2, 3, 4, and we're going to a five, right? Five for wave one, right? It will be kind of like a wave one of three of three of three, right? So it's many degrees down. So 1, 2, 3, 4, and 5, right? And probably have a wave two, and then the actual wave three. Now, so we still have some time, right? Um, so in terms of strategy of entering this trade, right? The most obvious thing that I want to point out over here is where do you put in the stop loss, right? This stop loss is actually here, okay, above this wave two. This is a 144.49, 144.5, right? Just do it as 144.5. Okay. Um, where is the 144.5? Just do it. You can set it higher, it doesn't matter, right? So this is the stop loss. Okay, now there is a chance that this A, B, C, and then this tree with a X, and then with another A, B, C, right? So then wave two becomes a double combination, right? So this is something to take note of. Okay, and in this case, what happens is that you'll be stop out, and then the price will reverse. So it's not the ideal scenario. Okay, it's not the ideal scenario, right? So then we can look at how do we adjust this, right? So that we risk lesser. So using if this is a 1, 2, 3, right? What happens is that the wave will not move above this wave one low, right? So we can either do this, right, or we can shift it higher. Why? Because wave one you can allow for a leading diagonal, which allows overlap, right? So if this is a wave one, right, there is a chance that it could overlap. So we want to set this stop above this wave two. Right, give it a little bit of movement, right? So if in case it breach, right, then we expect a double combination. Then we will enter above this or around this price, right? So now not catering for a double combination, right? The strategy is to enter here, right? Stop is here, right? If you are more active trader, you can definitely do your stop here, right? Do your stop somewhere in the middle, somewhere here, right? But for the rest of us, let's do it here. Okay, and then where is the target? Now, if we look at this entire wave again, right? This wave one is a very strong move down, right? And then wave two, right? And this wave one is itself a strong move down, right? This wave one or three is a strong move down. So we'll expect that the entire wave three will be strong, right? So in this case, right, because this wave one is small relative to this, so and if you use this the usual way that I do, right, which is wave one against the entire wave structure, 1.61 is just here, right? you will see that this movement then becomes a very weak wave 3, right? And 2.61 is here, but it's still not the ideal, right? So what's next is that I will use instead of doing this wave 1 against the entire 5 wave structure, I will use this wave 1 is to wave 3 to project where wave 3 will go. And over here, I would think that this wave 3 of 3 should hit this price, right? Let me see if I can get more precise over here. Okay, actually, it's quite nice, right? So, and over here, why what is 139.82 a good target? Right, it's because there is this previous support here, right, where price sharply reversed, right? This is the end of wave 1. So if we draw this over here, it's 139.86, right? 139.825. So this is where our take profit is going to be. Okay, so you can be more conservative, right, to put your take profit slightly higher, right? Or you can really just bet that this entire move will break and ride this whole dollar yen down, right? So over here, I'll just be more conservative, right? Um, I also do not want to make this risk reward ratio too ridiculous looking, right? So this is where our target is now. Over here is 139.88 against this current price of 143.52. So we have about 370 pips of movement against this 144.09, which is a 60 pips, right? So we have slightly over 1 to 5, 1 to 6 risk reward ratio. So it's still a very good risk reward ratio, right? Okay, so that's it for this dollar yen. I want to pull back up to here again, and just to show you that even if you have reached this, right, what happens is that you have broken the neckline again, okay, of these big head and shoulders, right? The ultimate target is still 127, right? So for a positional trader, what you can do is when you reach this, you might want to just shift your stop instead of taking out your position. Okay, so yeah, so this is really the picture for dollar yen. See, okay, thank you for watching this video and good luck in your trading.